SHIB, the self-proclaimed meme-coin killer, has taken the world by storm. Its rapid rise in popularity is undeniable. More and more people are becoming aware of SHIB every day. This global interest is fueled by the desire for quick wealth and the allure of decentralized finance. SHIB's cryptocurrency status, coupled with its active community, has created a unique appeal. Nations are also beginning to take notice of SHIB on global scale. Some countries are exploring its potential uses for payments and other financial transactions. The increasing adoption rate of SHIB is a significant factor contributing to its growing market presence. As more people and institutions embrace SHIB, its value proposition strengthens. This surge in interest has led to a surge in SHIB wallets. Data analysis suggests a possible correlation between the number of SHIB wallets and its price. While correlation doesn't equal causation, the trends are worth noting. A significant increase in new SHIB wallets often coincides with increased trading volume and price fluctuations. This pattern highlights the importance of understanding market dynamics when evaluating SHIB's overwhelming support within the cryptocurrency markets. The relationship between the number of SHIB wallets and its price is complex. While an increase in wallets suggests growing interest and potential buying pressure, it's not the only factor influencing price. Other variables, such as overall market sentiment, news events, and regulatory developments, play a crucial role. One theory suggests that a significant jump in new SHIB wallets, particularly those holding substantial amounts, can create upward price pressure. This foresight stems from the idea that increased demand coupled with a limited supply drives up the value. However, it's essential to remember that SHIB, like all cryptocurrencies, is subject to high volatility and market manipulation. Therefore, while the number of wallets is a useful metric to track, it's crucial to consider other factors: technical analysis, market sentiment indicators, and fundamental developments within the SHIB community to provide a more comprehensive view. Investors should avoid making investment decisions solely based on the number of SHIB wallets. It's a combination of factors to consider: reduction rate and who is buying into SHIB. One event that significantly impacted SHIB's price was Vitalik Buterin's decision to burn 410 trillion SHIB tokens in June 2021. Buterin, the co-founder of Ethereum, had received half of SHIB's total supply as a gesture from the creators. His decision to burn a significant portion sent shockwaves through the crypto community. The initial reaction to the burn was a sharp price drop. Investors, fearing further reductions in supply, panicked and sold their holdings. However, this fear-driven sell-off was short-lived. Within days, SHIB's price surged by over 80%, reaching new all-time highs. The Buterin burn highlighted the importance of token scarcity and the influence of prominent figures in the crypto space. It also demonstrated the volatile nature of SHIB and the potential for rapid price swings. The burn remains a defining moment in SHIB's history, shaping its trajectory and capturing the attention of investors worldwide. Investing in SHIB, like any cryptocurrency, requires careful consideration of market volatility. Determining the right entry and exit points is crucial for maximizing returns and mitigating risks. One strategy is to identify support and resistance levels using technical analysis. These levels represent price points where SHIB has historically struggled to break through. Another crucial aspect is setting realistic profit targets and stop-loss orders. Profit targets help investors lock in gains and avoid emotional decision-making. Stop-loss orders limit potential losses by automatically selling SHIB if its price falls below a predetermined level. It's essential to approach SHIB investments with a clear strategy and a disciplined approach. For those seeking to amplify potential returns, margin trading offers an alternative. Margin trading involves borrowing funds to increase buying power, potentially magnifying profits. However, it's crucial to understand the risks involved. Margin trading amplifies both gains and losses, making it suitable only for experienced traders with a high risk tolerance. Before engaging in margin trading, thorough research and understanding the mechanics are paramount. Remember, responsible investing involves careful planning, risk management, and a long-term perspective.